Well, welcome everybody to the Naked Forex webinar. This chart that you're looking at right here is the pound yen 4-hour chart. And the reason why it's such an important chart today or tonight, depending on where you are, is because this is exactly what we're talking about tonight. This is the trade, one of my probably, I don't want to say it's my favorite trade, but it is one of my favorite trades because I've traded these setups more often probably than any other trade. And it has kind of a unique place in my heart because these are the setups that allow me to get away from indicators and become profitable as a trader. There are other ones that I use today, but this was sort of where it all started. And it's called the Kangaroo Tail. The reason why it's called the Kangaroo Tail, I didn't come up with that. That's if you read a book which actually has about 2 paragraphs on this setup, it's called Come Into My Trading Room by Alexander Elder. That's where I first saw this idea of this setup, and I thought it was brilliant. And in fact, I have a whole chapter of Kangaroo Tails in my book called Naked Forex, so you can read all about those there. I'm sure many of you already know about Kangaroo Tails. But today, when we had our webinar, our Jump Sunday webinar, which is after the first hour after the markets open, we were looking at the charts, and Dan in Sydney brought up this chart here, which is a Kangaroo Tail right here. Now the reason why it's an important spot for a Kangaroo Tail, I like to trade where the market's repeatedly reversed in the past. So that's the first thing that we're looking for when we see Kangaroo Tails. We want to make sure they print at places on the chart where the market has repeatedly turned around. And that's the first thing. Oh, and by the way, if you don't have the book, you can email me and I will send you the book on Kangaroo Tails. I'm sure that most of you have the book, but if you're new here, you probably are going to be a little bit lost, and that's why I want to go over everything step by step so you know exactly how I trade these, and then you can see for yourself if they work for you. You can test them. You can use Forex Tester to test them. You can do whatever you want, demo trade, whatever you need to do to convince yourself that they work. You'll notice here that the market came up here and it fell. It came up here, broke through this level. This is the 144.15 level on the pound yen, and it fell. Came back up and it fell. Came back up and it fell. Came back up and it fell. Came back up. Couldn't get through. Tried for about a day, and then finally broke through. And then the market came back down here. It held for one candle, and then it broke through, and it actually wicked up and touched it twice, and then it fell, jumped back up, came back down, held for that's 12 hours that it held for, and then finally broke through, came back up, and it's printed this Kangaroo Tail. So this is how I trade Kangaroo Tails. First of all, I wait for them to occur at these lines on the chart. All these lines are places where the market has repeatedly reversed. It's gone there, touched it, and reversed. It's gone to a level down here and reversed. And it doesn't have to reverse when it gets to a support and resistance level, obviously, but what the market often does is it reverses. Or if it's going to bust through it, it will often stay there for a little while and wait before it finally gets through. Kind of like what it did down here. See how the market came down here, and it hit it, and it hit it, and it hit it, and then it fell? And then it finally broke through? That's the kind of thing you'll see with breakouts. When the market's going to break out, it'll often sit there and wait and wait and wait and then finally get through. And when it reverses, it'll often do what it did right here today, this Friday actually, which is it'll go up and it'll touch it and it'll just go away. To me, this is an ideal setup right now. This is a trade where today I've been waiting for this market to actually retrace a bit and come up before falling away. And that's what we have right here. We have the market has hit our level here and has fallen away. And why this is important is because we have a kangaroo tail here. What is a kangaroo tail? Let's talk about the definition. If you haven't read the Kangaroo Tail book, or you haven't read, I think it's chapter 8 on Kangaroo Tails in the Naked Forex book. I'm not sure. I think it's chapter 7 or 8. Anyway, this is what I like to see with my Kangaroo Tails. The first thing I want to see is I want to see a nice long tail. And I want to see the market come, well, basically, I want to see the market give me a reason to say, you know what, the market's come up to this reversal level where the market's reversed repeatedly, and it's actually exhausted itself at this level. And that's really what a kangaroo tail looks like. It's an exhaustion candle. The better ones are going to have an open and a close down at the bottom for sell trades. Now for buy trades, the open and the close should be up near the top, because the exact opposite setup as this. The open and the close at a very minimum should be in the bottom 33% of the candle. How do I check that? Well, I can take my Fibonacci grid here, and I can pull it from the high to the low, and I can see where does the open and the close lie. Now, obviously, the Fib grid is not going to have your 33% level, so you have to add that on if you can't eyeball it, and that's fine. So I just put the 33% level on there, and I can see it's right here. And clearly, the open and the close are well below the 33% level. So that's definitely would qualify as a kangaroo tail. So that's number one. Number one is that the candle prints on a zone, right? That's number one. Candle prints on a zone. Candle on a zone. What's a zone? A zone is a support and resistance level. And we've had webinars in the past about how you can draw these levels. It's not that difficult. It's in the Naked Forex book. It's not that something that you need to really, the easiest way is to go to a line chart and look for the bends in the line chart. Right. When you see those bends repeatedly, you know you've hit a zone. There's one right here. Obviously, there's one down here. There's one right there. You can go back and you see there's one right here. Boom, 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 boom. So you'll find these, and they will show up over time. They will be obvious over time. But we can do a whole webinar in the future on this. I think we've recently done one actually on drawing zones. Okay, so that's number one. Number one is that the candle is on a zone. Number two, the second thing, and that's obviously what we have here with tonight's pound yen for our kangaroo tail. It's on a zone. Number two is that the open and the close are open and close in top or bottom 33%. Okay? Now, obviously, it's got to be in the top 33% for a buy trade, and in the bottom 33% for a sell trade. So this is a sell trade, and it's clearly the open and the close in the bottom 33%. The next thing is that the open and the close, and some people ask me about this, say, why do you want this? Why is this so important? The open and the close must be inside the previous candle. Now let me explain this. Why must the open and the close be inside the previous candle? Here's why. Let me show you. Let's see if we can actually find one where there's kind of a balancing act actually with kangaroo tails where you have to see the open and the close inside the previous candle, but you want to see the rest of the kangaroo tail away from the previous candle. So it's a really sort of tricky thing. Here's an example right here of this one right here. This is an example of a candle that some people would say, hey, look, it's on a nice zone. We've got all these candle lows right here, and there's some support. In the future, we actually see a little bit of resistance there. Maybe if we go back, we see there's a bounce there, there's a bounce there, there's another one there. So we say, yeah, this is definitely a level This is the 124.50 level. And so we look at this, we say, oh, we got a kangaroo tail here. Well, even if the open and the close are in the top 33%, which I think they are for this candle, notice in relation to the previous candle where the open and the close are. The close is actually outside of the range of this candle, so between the high and the low. The high of the previous candle is 125.23. The low is 124.94. And what we have here, friends, is this is an invalid kangaroo tail. It is not a good kangaroo tail. It's not a kangaroo tail I would take. And there are other reasons why it wouldn't have been a valid trade anyway. But looking at the candle itself, you think, well, that's a pretty good kangaroo tail. But because this close was so saggy and it came down and really sagged too low, it didn't have a high and tight close here. So for me, that's a no-go trade. So I would not take that trade. Whereas this one over here is actually much better. And notice how the open and the close are probably in. Let's see, the close, 23.90, the open, 23.90. So the open and the close are at the same price. And what's the low on this one? 23.90. So the low equals the open and the close for the previous candle. So the range does contain it. Does contain the open and close. So that would be a valid one there. Assuming, of course, that we had a support and resistance level drawn here. I don't know that that's the case. But let's just assume that we had drawn a support and resistance level right here off these highs. And we go back in time and we see, actually, yeah, there's a nice touch there, a nice one there. So we have a little baby kangaroo tail there. And I'm going to talk about baby kangaroo tails in a moment because that's important and they can trick people. So this one's good because the open and close are inside that candle. Now let's go to our current one and go through the rest of the rules. So the open and close are in the previous candle. It's in the open and the close are in the bottom or the top 33%, depending on if it's a buy. It's got to be in the top 33%, or a sell. It's got to be in the bottom 33%. The open and close is inside the previous candle, right? Now we sort of get into some tricky things here. The next thing is that the candle should have room to the left. The kangaroo tail. Kangaroo must have room to the left. Now this is a tricky thing, and it's sometimes people wonder, kind of like the open and the close thing inside the previous candle, why is it so important to have room to the left? Well, let me show you. If we see the market come down here, and look what happened here, where the market came down to this level, and then it started putting some bullish candles here, and we start thinking, hey, guess what? Maybe the market's going to break out and go higher. Maybe it's bottomed out. After all, it came over here, it came down to around this level, and then it rocketed up. So maybe that's going to happen over here too. Well, what normally will happen when the market makes an all-time high or an all-time low, or even a significant high or a significant low, what will often happen is we will see there is a lot of room to the left. In other words, if we're looking at swing points on the chart, there's often room to the left. Okay? So if we look at, if we even just back this chart up and say, where was the ultimate, swing point on this chart? Where are the really big turning points? What do they look like? If you go back on the chart, actually, if we went back on a daily, and you were looking at the pound yen, I'll show you actually where it really exhausted itself. It was right here. 2007. And I actually remember this quite well. See, what normally will happen is that at these all-time lows and all-time highs, or even just those spots where the market doesn't get back there for a long time, we will see something like this. Look how much of this candle here printed on the chart, on an area on the chart where the market hasn't printed in a long time. Look at this. You can take this box here, which represents the amount of the candle that printed in a unique space. You can pull it back for years. I've only pulled it back here for 4 years to 2003, but you get the idea. The idea is that when you get it to a swing point, we don't know if it's going to be an ultimate swing point and the market's going to turn around and never go back there, but we do know what normally happens is they look like this. They have room to the left. Here's another one down here, which didn't end up being this. See how this wick extends beyond recent price action, and you can pull it to the left. This didn't end up being the ultimate sort of swing point, but because it only went down. I mean, when I say only on the pound yen, from the low of this candle, it only went down 1,500 pips. On the pound yen, 1,500 pips is just a month or two. But so there you go. So that's what they look like. So that's why we want to see these areas on the chart where the market has not printed in a long time. In other words, there's room to the left. That's what we have here. Could there be more room to the left? Absolutely. But it's got plenty. Believe me, this is plenty because the market hasn't printed where this Kangaroo Tail printed. The market hasn't been there since these candles right here, and that is 73 4-hour candles ago. That's a long time. 73 candles is a long time. So that's good to see. Now, if it was up higher over here and extended beyond this one, it'd be even better. Or down here, if it had a buy Kangaroo Tail down here and extended beyond these, that'd be even better. But the point is, it's pretty darn good, and it does have room to the left. So remember, what are our 4 rules? There's actually one more that we're going to talk about here before we get into getting into entries and how you can fine-tune your entries on these. But 6th of February top is valid. Yes, this would be valid too. Raul, you've got a good eye. This would be valid, and we can actually apply all the rules to this one if you want. But you'll see that all the rules actually fit here as soon as we get to the last rule. That would have counted as a valid one right there for sure. Yep. Okay, so so we've got this Kangaroo Tail here. Let's go to the 5th one here. We've got it on a zone. We've got it open and close in the bottom or in the bottom 33% of the candle. The lower the better, by the way. We've got the open and the close inside the previous candle's range because they're both below the high of this candle. The high of that previous candle is 143.68, and my open and close are definitely below that. And then I have room to the left here, which is this shaded area, which suggests that this could be a swing point for this pair. And finally, the last thing I do is, and this is the conservative entry. We're going to talk about an advanced entry in a moment. But the conservative way, the standard way, the run-of-the-mill way of entering these is that the market must break the Kangaroo Tail on the next candle. What do I mean by the market must break the Kangaroo Tail on the next candle? What does that mean? Well, let's back it up and show you here. What I mean by that is that the market must take out the low for a sell Kangaroo Tail. And it must do it on the very next candle. You can see it did this on Friday, in fact. Here's our Kangaroo Tail right here. Here's the next candle. So the sell order goes a few pips below the low of that candle. The low of the Kangaroo Tail was 143.44. And so selling at 143.38 would be 6 pips lower. And the stop loss goes up here above the high. You can see it's actually on my chart. 144.75 is my stop. And then all I'm going to do now is see if the next candle, the next 4-hour candle, can take out that low and enter my trade. If it does, it's valid. If it doesn't, it's game over. And that's actually another reason why the one that we were looking at before, and you'll see this rule will get you out of a lot of losing setups. Here's one here that some people might have been sucked into, this one right here. And if you have a low here at 140.22, the low of the next candle is 140.18, which is not 6 pips lower. It may have triggered in this one. It may have triggered, and it would have probably been stopped out on this candle if it was triggered, because it probably wouldn't have taken out the profit target, which most likely would have been down here. But it may not have triggered. It really depends on how far you put it on away from there. I like to put 6 to 10 pips away from the low or the high. And what you'll notice over here is that the kangaroo tail that you were looking at, Raul, that one right here with this arrow, that one was in fact triggered on the next candle. See how the next candle did trade lower? So that was in fact a valid one. So that was great. But look at the one that we were looking at earlier. I was looking at an example over here where we were saying, I think it was, I'm not sure if it was this one, but here's one. Let's say that this one qualifies and has an open and a close in the top third of the candle. It wasn't actually this one. We were looking at a different one. Guess what? Let's say that it was valid. It's the open and the close are inside the previous candle. The open and the close are in the top third, let's say. I'm not sure that they are. They might just be in. Let's see. Now I'm curious. They might be just inside. No, they're not. The open and the close are not in the top third, so that one would be invalid anyway. But let's say that it was. Guess what? The next candle does not trade higher than the high, so it doesn't trigger it. This one over here, look at this one over here. What about this one? By putting my sell order a few pips below the low, which is 143.31, and I'm waiting one candle for that to trigger, the next candle only went low as 143.35. And remember, my low is 143.31, and my order would have been around 143.25 or 143.22, somewhere around there. And guess what? It never gets down to 22. It never triggers my order. The next candle goes up, and I save myself from getting stopped out over here just by using that rule. Now, I know that a lot of people don't like that because they don't like the wide stops. But what will tend to happen is I will tend to have a much higher win rate if I'm willing to wait for the next candle to trigger me. Other people don't want to wait. They want to just get in, or they want to get in on a cheaper price. Let's talk about that, because that's really the part of this webinar that I wanted to talk about tonight, because it's not something we've gone over much in the past. Let me show you something. See this kangaroo tail right here? This is going to be really good. Maybe I'll send, I tell you what, whoever gets this right, I'm going to send you a book, okay, a trading book. And I'm going to send it to the person who gets this right, okay? I'll do it tomorrow. All right. Let me, so you have to give me your address if you're the winner. Let me ask you something. What do you notice, if I'm looking at this setup right here, this kangaroo tail, what do you notice about this candle and this candle over here? The candle to the left and the candle to the right. So we have the kangaroo tail in the middle. We have a candle to the left and a candle to the right. What do you notice about those two candles? Red engulfs the blue, bearish big shadow. A lot of guesses here. Bearish. Raul, what do you mean by piercing almost previous gains? What do you mean by that? First is bullish, the second is bearish, says Sally. That's right, absolutely. Bearish engulfing, says FX Trader. Yep. It is bearish, Gregorian. I'm looking for something else. What do you notice about previous bull candle was erased by the next candle to the kangaroo tail? Yeah. That's pretty much what I'm getting at, Raul. Let me ask you one more thing. Raul. This is going to be the giveaway. Whoever, now someone's going to get it right now. Okay. What do you notice about the high of this candle right here? The blue one. What do you notice about that? It's bull. Yep. Close price. Yep. Close price is up near the high. Yep. That's right, Beasta. What I want to ask you is compare the high of this candle to the high of this candle. Yep. Gregorian, you just got it. You just got it. Yep. Gregorian has just nailed what I wanted to talk about tonight. And this is the one thing that we haven't really done a lot of this at FX Street where we talk about this, but I do want to talk about it because it's really powerful if you want to use it. Now, again, what I have found is that my win rate goes down if I don't use the standard entry, but it does allow me to have a tighter stop. So if that's important, then that's one thing I can do. So this is what I'm getting at, and if you can send me, Gregorian, if you can email me your address, I'll send you a book tomorrow. It's not my book. I'm going to send you a book about a poker player who became a trader. Okay, how's that sound? You can email me at walter@fxjake.com, and I'll send you that book. Okay, buddy? I hope you don't live far away, because that's a lot of postage. That's all right. It doesn't matter. I'm in Australia. Everything's far away. Yeah, UK. There you go. Other side of the world. Awesome. That's all right. The name of the book is I think it's called The Poker Face of Wall Street. I'm not sure. Have you read that one, Gregorian? I'm not sure. No? Okay, excellent. Well, there you go. I just sent it to everyone. Okay, so what I'm getting at is exactly what Gregorian mentioned, which was, see the high of this previous candle? This is the other side of the kangaroo tail. So the kangaroo tail's here. Then we have the kangaroo's leg, right here. And then we have the other kangaroo tail's leg right here. So this is how we get in on these entries. This is the really aggressive kangaroo tail trader does this. The really aggressive kangaroo tail trader says, okay, well, we're at this point right here, right? We say, oh, there's a kangaroo tail. It's printed. It's just closed down here, and now the next candle starts to form. What I do is I look at this one and I say, the high was 143.68, all right? And then I say, well, the high of this candle here, not the kangaroo tail, but the previous candle, is 143.68. So what I want to do is I want to put an entry order right around that level. Usually if it's a sell, I'll put it a little bit lower. Let's say around 143.65 or so. So right around there. Whoops. Right around that area right there. Whoa. That's it right there. That's where I want to put my order. And guess what happens? The very next candle goes up, triggers my entry order, and then falls. And that is the aggressive retrace entry. It's called the leg entry because you're getting in with it. So we're looking down, like let's say you're a skydiver and you're looking down this kangaroo. You see the kangaroo tail is right here. The kangaroo's head would be right around here, and the kangaroo's two haunches or two legs would be right here and right here. And what we're banking on is that the next candle is going to have about the same size leg as the previous one, and we can use that to our advantage because it happens often enough to make it worthwhile. I still have my same stop up here, but instead of having a sell order down here, because remember, my low on this candle was 44. So instead of getting in at, say, 37 right here and having my stop up here at 144.75, you know, that's a long ways away, right? That's 138 pips. Instead of having 138 pips of risk on this 4-hour chart, I instead get to do something like this right here. where I instead have 111 pips of risk. So I've shaved off some risk there. And sometimes it'll shave off even more than that as a percentage of the overall risk. I will admit that I often use the standard entry because I just like to have a high win rate. But if I've got a really exceptionally long kangaroo tail, I will use the leg entry because I'm looking at getting in with a little bit of reduced risk. I know that if the trade goes bad and stops me out, it's going to always trigger my entry on the retrace entry, on the leg entry. But I also know that it happens often enough where these kangaroo tails print like that, where I get two sides that are about the same, you know. So if we go back here in time and let's just see if we can see that. Look at on this one, the high on this one was 147.15, and the high on this one was 147.06. So it was 9 pips off on this one. So this leg was 9 pips higher than this one, right? On this one here, this one didn't have a whole lot of space, but this one was quite different, wasn't it? The high was 146.93, and the high here was 146.67. So that one wasn't a very good example at all. But you will see them, funnily enough, they happen more often than you would think. Here's the one that we were looking at earlier, I think, this candle. If we got in on a leg entry, obviously it would have been triggered, but if we were waiting for it to break the high here, we never would have been triggered and we would have avoided this losing trade. The leg entry would have meant being triggered down around this price, and it also would have meant being stopped out. This one right here, standard entry would have avoided the getting stopped out up here, but the leg entry on this high would have obviously been triggered quite easily. So you can see that over time, there are, if you go back in time and look at these kangaroo tails, you'll see that the legs happen very, very often. This one right here would not count as a kangaroo tail. Why? Because the open and the close are not inside the previous candle's range. See how the close here is higher than the high of this previous candle? So that violates our rule, right? So we wouldn't be able to take that one. I wouldn't take that one because of that. So that's the basic idea here, that we see a candle on a zone. We see the open and the close in the top or bottom third. The open and the close are inside the previous candle. The kangaroo has a lot of room to the left, and the market breaks the kangaroo tail on the next candle. Or for the aggressive trader, we use that leg entry where we're looking for a retrace of about the same as the previous candle. That's basically what we're looking for. And I've got all of these things jumbled up here. Let me zoom in so I can take out my email or something. I don't like messy charts. It's funny how even as a naked trader, you can still make your charts all messy. Yeah. Fundamentals. I tend to... Are there any questions here? There's a question. What is the difference between a kangaroo tail and a pin bar? I don't know if pin bars have all the same rules that I use, but I know people use them interchangeably, so I don't really see them as much difference. If you're talking about a pin bar, you're probably talking about a kangaroo tail, assuming, of course, that you believe that a pin bar has an open and close in the top third, that the open and close is inside the previous candle, that the kangaroo tail must have room to the left, that the market breaks on the next one, all that stuff, right? And it's on a support and resistance zone, all that stuff. Then you would say, yeah, it's the same thing. But I've seen people trade what they call pin bars, and they don't fit all of those criteria that I just spoke of. So to me, they're different. But it really depends on how you trade them, I guess. They will... What are my targets? Okay, yeah, let's talk about that. So on the pound yen, this is what I'm looking at right now. I've got my stop loss at 144.75. I've got my first target at 142.35. Then I got my second target at 140.59 and my third target at 138.60. These are all support and resistance levels. Once the market hits 142.35, I won't have a problem moving my stop loss to break even and then shooting for 140.59 because we don't know if it's going to go to 140.59 or not. let's look at other ones, because we see some people say that they see examples of the same sort of setup on the pound. I don't see it on. Is it the pound 4 hour we're looking at, or the pound daily? Because I don't see it on the pound at all. Oh, maybe it was a while ago. But notice, like on the daily or something maybe. But notice how this one didn't have a lot of room to the left. Those candles were in the way, so that wouldn't qualify. Here's one here, which just completely got obliterated by this big bearish candle. Let's keep going here. Yeah, I don't have any here on the. I don't have any on the pound. Someone said that we had one on the euro yen. Who said that? I want to get my chat window up here and see. Very similar on the euro yen 4 hour, says Marvin. Okay, let's check it out. Thanks, Marvin. Euro yen 4 hour has this. Yep, very similar. The only difference, though, Marvin, is that it hasn't come down as much. See, I've been waiting today for the pound yen to make a bearish candle to tell me that it's probably double topped. I don't really see that on the euro yen just yet. On the euro yen, I have these little tiny candles here, so I don't really see that big fall just yet. But clearly, the high on the first leg was 125.16, and the high on the second leg was 125.11. It's printed up here. Let me just make it sure that it's on a zone here. It looks like you could make the case. Actually, let me go to my 4 hour charts, because I don't want to mess up my daily one. So I'm going to go to my 4 hour and just take a look at the charts here. So given that we have all of these levels, yeah, you're going to find that 4 hour charts are going to be different depending on your broker, I think. So I use the 5 p.m. New York close. I would say that our Kangaroo Tail has printed on a zone here. I would say that we have the closest zones are going to be around 127.56, 126.50, and 125.40. And that would be right where we're at 125.40. So yeah, I would say that's a pretty good spot for one. If I were trading this, if I didn't trade it on Friday at the immediate break here, I would actually wait for a much more bearish candle here before I got in. I want to see a 4 hour candle break lower than these lows here. So the low of the previous candle was 124.80. I'd like to see a close below 124.75 before I get really interested in this one, because the euro is just a little bit stronger than the pound at the moment. That's all. Are there any other charts that anyone would like to take a look at while we're here? Or any questions about Kangaroo Tails? Aussie dollar, says Raul. Let's take a look. I don't have a Kangaroo Tail. Oh, I know what I wanted to talk about. Sometimes people get sucked into this idea that a really tiny Kangaroo Tail is the way to go because your stop is so close. I don't buy that, and I've tested it, and I've actually found that the longer the Kangaroo Tail, the more likely it's going to work. So I'll go to the daily. So when I see these little tiny Kangaroo Tails on the charts, I don't get that excited like other people do, because they like them because the stop is so tight. I actually prefer to see the long ones like this one right here. Those to me have a much higher hit rate. And the little ones, you can see this one would have worked out because it went up to this high right here, and even went up to this high, and even this high over here, it went up to over here. So that one would have been all right, depending on where, when and if you move your stop loss to break even. You may have been able to achieve, 3 profit targets on this one. But this one, the same thing, and it was just a nice long tail. And look at that space to the left here where the tail hangs lower, and we see all this room over here to the left. So it's a really good, nice looking Kangaroo Tail. Nice high, tight close up in the top third. So really good. Let's go to the daily here now. Raul wants to see the daily Aussie. So our daily Euro Yen, daily Aussie. Yeah, so the Aussie had a kangaroo tail. This was a few days ago, last week, and you can see that it broke higher the next candle. It went right up to where I expected it, which is these lows right here, and it hasn't been able to get through. To me, this is ripe for the very least another double, like another touchdown, perhaps a double bottom. This does not look like to me it's ready to break through 102.70 because of these chop, chop, chop. I think it's going to bend down here and make another go at 101.75, perhaps even double bottom down there before possibly breaking higher. So we may get an opportunity. For those of you that didn't trade that one, you may get an opportunity later. Please, CAD Yen. I got 2 positions short, and I don't know what to do after China economic data. Will it reach the fib? Okay, Gregorian is looking at the CAD Yen. What time frame? What are you trading? What time frame? The daily or? $15-minute. Okay. All right. Raul says, one needs to take a position after the close of the second candle. If not, what would be the ideal way to enter a trade? Please explain. So in other words, you're not taking my advice by going on the first, yeah. See, what I found is if you want to trade these, the best candle to trade these on is the one immediately after. And you can go back and see this for yourself. But if you're going to trade a kangaroo tail, the very best is right here. See what happened on this kangaroo tail right here? This is what we call, this is a totally different setup. It's a with the trend kangaroo tail, so it's not going to have space. It's not going to have room to the left, okay? This one right here. So in some ways it's going to be a little bit confusing because we didn't talk about this type of setup. But basically, I want to get in on this when the next candle rockets off. And that's really what I want to see. I really want to see the next candle take off. That's what I want to see here. The next candle here takes off. If I didn't see the next candle or if I didn't see it and I missed the next candle or whatever, I probably would just let it go. I probably wouldn't be too excited about taking that trade if I missed it. Because if I get on any kind of retrace, the market might actually just stop me out. You know what I mean? So notice how this one right here, they are viable on shorter time frame charts, but you just have to be really, really careful, guys. Here's the thing about shorter term charts. We'll go to the CAD Yen and we'll look at the 15-minute chart, okay? But here's the problem with here. I understand why people want to trade 15-minute charts. I get it. I really do. However, here's the thing about 15-minute charts, or 5-minute charts, or 3-minute charts, or even the hourly charts. Although the hourly charts are pretty good. But if you're going to trade, if I decide I'm going to trade a kangaroo tail on a 15-minute chart, I better have a lot to hang my hat on, and it's not going to be just the kangaroo tail. In other words, I better have a kangaroo tail on a 15-minute chart that prints on an absolute beauty support and resistance level. Or that kangaroo tail is a long, long tail. Or it's a double top or a double bottom or something. You know what I mean? Like when we're trading the lower time frames, we actually have to have an interpretation of all of. Yeah, I don't really use indicators, Sally. I mean, you can use indicators, of course, but the way I look at it is that when we look at a daily candle or a 4-hour candle or even a 1-hour candle or a weekly candle, we have a whole, like if you're looking at a daily candle and you take a kangaroo tail, that means the whole day, all 3 sessions, Asia, North America, and Europe have all had a go at trading this market, and they've all ended up in this spot. So Asia could have taken it higher, and then Europe took it lower, and then New York took it lower, and then we ended up with a bearish kangaroo tail, right? Well, let's see if I can give you an example, actually. This might be better. So what happens when we get a bearish kangaroo tail is everyone's had a chance that day, and everyone's given it a go. Like this one right here. Here's one right here. Here is a daily bearish kangaroo tail right there. Okay? And what does that tell us? Did I zoom out? Yeah, there it is right there. Okay. November 2011, right there. So what does that say? That says that the market went to a level where it's reversed in the past. That's why there's a zone there. And all three sessions tried to take it higher, and they couldn't. And they ended up, in the end of the day, and at the end of New York, when this candle closed at 5 p.m. New York time, it almost closed on the low. The low was 76.41. The close was 76.42. It was 1 pip off the low. That tells me that the market it's not going to take it higher. Now, the next couple days it tried, but it traded lower than my low of the kangaroo tail, would have triggered my entry, goes higher, higher, and then finally falls. And where does it fall to? The very next zone down here. Big surprise. Now I move my stop to break even, and I think it's going to move down here or down here, and it doesn't. It comes back up and stops me at break even, but at least I had some profit down here. So the thing about a daily chart is that if I have a job, I don't have to do a lot of sitting around watching the charts. I can just check my charts twice a day, before I go to work, after I go to work. If I'm trading the 15-minute chart, I have better have an excellent support and resistance level to trade off of. And I better have interpreted all of the nearby candles and not just one 15-minute kangaroo tail. Does that make sense? It's just a little bit trickier because I want to have one really, really good zones, right? Like if I'm trading a 15-minute chart, I want to trade it off like a daily support and resistance level. I want to go where the daily charts can't break through, and then I might go in on a 15-minute or a 5-minute chart. And if I'm going to trade a reversal, I'm not going to just look at the kangaroo tail. I'm going to look at a lot of things going on, a lot of the other candles. For example, here's one thing we can do. When the market is starting to fizzle out, what you'll tend to see is wicks. So let's see if we can find it. Let's see if we can find. See this area right here. Actually, let me zoom in so you can see. See these candles right here in the shaded area right here. I'll get rid of this shaded area. These candles right here are starting to tell us that there's some exhaustion happening. The market can't really go any higher because why? Because they're starting to show some wick, and they're starting to get tiny, and the opens and the close are getting close. See how the opens and the close of these candles are very, very close? Yeah, exactly. And then the last one, this bearish one, it takes out all of these other ones, and that says, okay, that's it. It's going to go lower. It can't go any higher. So when you start to see on a 15-minute chart a lot of wicks happening, a lot of opens and closes, that sort of thing happening, it usually means that the market is starting to exhaust itself. Now, if I was to look at this CAD yen chart, I would say I have no idea how. If I were trading this chart, I would wait for it to get to 94.25 and I'd look for a sell signal, or I would probably wait for it to get down to this level down here at 92.30 and wait for a buy signal. 92.30 I'd look for a buy, and 94.25 I'd look for a sell. But right now it's in no man's land and it tells me nothing. And I don't want to have anything to do with this chart because this is just a whole lot of nothing right here. I'm interpreting these candles and it's saying it's a directionless market. Maybe there's news coming out in Canada later on, I'm not sure. But that's the kind of thing I would expect based on what this looks like. Any other questions? So these are viable on shorter term charts. You just have to be a little bit better at trading the really strong zones and interpreting more recent price action than just a one candle or two candle formation. Yeah, Gregorian says he had struggles with 15-minute and 5-minute using these methods and too many mistakes. Yeah, it's just trickier. Here's the thing. You can do it, but it's so much easier, guys, if you start. Like if I do daily Kangaroo Tails for a year and weekly Kangaroo Tails for a year, I can still follow 25 markets or 35 markets and trade 35 markets, and I'm going to get enough trades. I don't have to worry about them because I have to wait, 24 hours before I can do anything. I got to wait and see what the daily close is, right, before I even do anything. So there's a lot of waiting around. But then I can work my way down to the 4-hour and the 1-hour, and then finally, after a couple years of this, maybe I'll do it on the 15-minute charts. I understand why people want to do 15-minute charts because, they might have smaller accounts or they want to trade more often. But you're almost better off just trading like a boatload of markets. In my opinion, I found it easier for me as a trader. It's easier for me to just watch a lot of markets and just trade Kangaroo Tails on the daily, 4-hour, weekly charts on a lot of markets, like occasionally on the 1-hour charts. I found that to be much easier. Yeah. Bank of Japan is coming tomorrow. Great. So they're probably going to try and weaken the yen, right? And then how do we know the euro yen is not a pause before going up? Good question. Here's how we know. This is how I interpret it. If the chart, and we've done a webinar. Actually, there's a whole webinar on this. If this chart right here, the euro yen, prints a big bearish candle, then I would say it's going lower. And when I say a big bearish candle, I mean a large candle that closes below 124.75. Ideally, it would also have a higher high than these previous two candles. So it sort of takes those candles out, engulfs those candles. If I got a big bearish candle here, I would say it's going lower. If, however, it keeps tightening up here and staying really close together, and you get a lot of these wicks and things like that, and it doesn't really go much lower, then I'd say it's just gearing up for another launch higher. And we actually did a webinar on this. I don't know if I can find it here. Let's see if I can find it. I'll go to FX Street. And if you go to FX Street and you go to webinars under my name, you will find I think it must have been in 2012. Yep, here it is. Naked Trend Trading here on December 19th and Naked Breakout Trading. Those two webinars we talk about how do you know the difference between, especially this one on December 19th, how do we know the difference between a market that is pausing or a market that is pausing and then going to keep going in the direction of the trend, or turning around. So that was the webinar right there. I hope that helps. Oh, no image. Sorry. That's really it, guys. That's all I've got. Oh, you don't have the image, right? Here, let me write it on here. You just have the chart, don't you? Sorry, guys. It's December 19th and December 27th. Thanks a lot, guys, for your time. I really appreciate it. Thanks, guys. Have a good one. Bye. Thanks. Thanks for your time.